Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday the 20th of September 2024, and joining Lee to post some questions on the financial market themes for the week ahead is Simon Mays, Head of UK, Ireland and Switzerland Corporate Sales. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Hi, Lee. Great to see you.
Hi, Simon.
Another focus on central banks this week. We had ECB week before, and this week the Fed, Bank of England, and Bank of Japan. So, I guess the obvious place to start is the Fed. 50 basis point cut, which we forecast as a bank. So, what are your feelings about that? Was there a sense that they were behind the curve? Is that why they went, or for 50 rather than 25? And what does that mean for the Fed going forward over the rest of the year?
Yeah, Simon, like you said, our view here at MUFG was that we thought that the Fed should do 50. Obviously, happy that they followed through and delivered a bigger rate cut to start the rate cut cycle. To us, we thought it made sense that Fed themselves thought they probably should have started to cut rates back before the summer. And then obviously over the summer period, we had more evidence there coming through of a much weaker labour market than the Fed had been anticipating. So with the policy rate still very elevated and above kind of their own estimates of neutral, closer to 3%, and with inflation falling back closer to their 2% target, it's harder and harder to justify keeping rates at such high levels. And to us, from a kind of risk management perspective, it always made more sense to get rates down more quickly, because clearly if they keep rates too high for too long, there's a bigger risk that at some point the labour market could weaken more sharply going forward. And the Fed themselves obviously want to avoid a harder landing for the US economy. So I think in terms of the market reaction, like we've seen, I think a lot of people had obviously anticipated the Fed was likely to potentially do a bigger 50 basis point cut. So in the rate market, we haven't really seen much follow through in terms of the move lower in short-term US rates. And even at the long end of the curve, rates have actually come up a bit, in part reflecting more optimism amongst global investors that with the Fed being a bit more proactive in terms of cutting rates now, that helps to ease some of the risks of a harder landing and should give investors more confidence of a softer landing, not just for the US, but the global economy. So in the FX market, that's really where we've seen the reaction in that those more kind of high beta global growth sensitive currencies such as the pound and the commodity currencies of the Norwegian krona, Aussie dollar, New Zealand dollar, those have been the currencies that have outperformed since the Fed meeting, whereas the kind of more safe haven, low yielding currencies like the yen and Swiss franc have weakened.
Yeah, gotcha. Yeah, like you said, the dollar reaction was fairly limited, it seems, after that. You've got the Bank of England as well, standing sort of far apart at the moment from the ECB in the US in regards to, this week at least, not cutting rates. New voter as well, Alan Taylor, so bit of interest for everyone to look at there. But did it play out exactly as you thought? And when do we expect them to resume cutting rates?
Yeah, I don't think anyone, even ourselves, were expecting them to do anything this week in terms of policy. It was always seen as a holding operation. But I guess on balance, we were surprised by the voting pattern and that it was more unanimous decision to keep rates on hold. And there was no or very little indication that they're signaling anytime soon that they're likely to speed up the pace of rate cuts. So we're still very much kind of sticking with our view that we think they will cut the next meeting in November. We do think they could go again more quickly in December, but like I say, there was nothing kind of given away in this week's statement to imply that with higher probability. So for the pound, it's a supportive story. It makes the pound look relatively more attractive again as a high yielding currency within the G10 currencies, and with risk sentiment as well improving after the Fed meeting, with global growth fears easing, that's helping to boost demand for high yielding currencies like the pound. As we speak, we can see the pound has been trying to break higher against the euro this morning, and we've already seen as well cable rising above the 133 level. So short term, the setup looks like the pound is well set for further gains in the short term.
how much of that do you think is justified? I mean, is it a case that the fundamentals are looking better now, probably for the UK compared to others, or is it more of a case that perhaps there's a good chance that the rate markets catch up with that? The rate the OIS pricing for the UK seems to be a little bit behind the other major economies. Do we think that's going to unwind at some point and maybe see a snapback in the pound?
Yeah, in the very short term, I think the Bank of England is still sticking to their kind of concerns that inflation could be more persistent in the UK compared to elsewhere. So they want to see more concrete evidence of further slowdown in service sector inflation and in wage growth before they're more comfortable to start cutting rates. Here at MUFG, our view is still that we do think that the UK will follow the US and Europe with a lag, and that we are expecting to see a slowdown in the service sector and wage growth going forward. And then perhaps later this year or next year, at that point, when the Bank of England has become a lot more confident in the inflation outlook, with rates, like you say, already very elevated, there'll be a lot of room then for them to start cutting rates more quickly next year. So based on that view, we do think that the pound has obviously had a very good run this year. In the very short term, we could still see some further upside, but we do think that we are kind of approaching a turning point, that when the Bank of England does start to see that evidence coming through of inflation coming down more like that they want to see, that's when they'll start to become more confident in terms of bringing rates down more quickly. And when that happens, I think that's when you'll see the kind of turning point and the pound giving back some of the gains that we've seen so far this year.
Got it. And last year, this week at least, the Bank of Japan, no change there, but fairly hawkish message. And recent inflation data over there showed the core CPI picked up again. It was 2.8% in August. Yeah, how does this play out for future hikes in Japan, or is there the notion that perhaps with the Fed going on an easing cycle from a dollar yen perspective, that might do some of the job for them?
Yeah, it's a good question. Like obviously today, in terms of the market reaction, we can see that the yen has taken a hit after today's policy update from the BOJ. And that I think was mainly on the back of comments from Governor Ueda in the press conference, where he definitely sounded a bit more cautious about the need to hike rates again so soon. I know some people in the market had started to speculate that they could hike rates again as soon as the next meeting in October. Our view is that we thought they'd wait till December, and we think our view is looking more likely now after Governor Ueda's comments today, where he indicated that given the recent strong strengthening of the yen and the weakness we've seen in the equity market and financial market volatility over the summer period, that's made the BOJ more cautious over the need to hike rates again so soon. Admittedly, like you said, he's still emphasizing that as long as the economy keeps performing as they expect, if the labor market continues to show improvement with wage growth picking up, and if financial market conditions stabilize, then they would expect to hike rates again. So to us, it's still consistent with them hiking again in December or early next year. And as well, I think adding to that uncertainty is, like you say, what happens with the US economy. If the Fed helps to engineer a softer landing, then that as well would create more room for the BOJ to keep hiking rates.
Yeah, and you mentioned obviously yen has underperformed this week, especially after Bank of Japan. Swiss is another currency that looks like it's underperformed a bit this week. Do you expect this to continue next week?
Well, certainly next week, the big focus for the Swiss franc, alongside general kind of trends in risk sentiment, will be the Swiss National Bank meeting. Obviously, they were the first of the major G10 central banks to start the rate cut cycle. And initially, that did trigger some weakness in the franc. But I guess the story since then really is that the franc has bounced back. The fact that they're easing ahead of other central banks didn't have a lasting negative impact on Swiss franc performance, and that's obviously creating a bit of a headache for the Swiss National Bank, in that inflation as well in Switzerland has continued to surprise to the downside recently, and that Swiss franc strength is just kind of adding to the downside risks to inflation. So you could argue from that perspective there is some pressure on the Swiss National Bank to try to weaken the franc, because the market is hedging its bets between whether they'll do 25 or 50 next week. Our view is, we think on balance they'll probably do 25, but if they really do want to weaken the Swiss franc, even just temporarily, that they'd have to do at least 50 next week. Otherwise, I think it's unlikely to really to weaken the franc.
Got it. Thank you. More central bank focus next week.
Thanks, Simon.
Thanks very much.
Thank you for listening to this MUFG Global Markets podcast. Rate, review and subscribe, and contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets research team.